Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to today's podcast. We're joined by Derren Martin, CAP HPI's Director of Valuations, for our regular end of the month review of trade values. So lots to chat about this month as we have the double impact of increased part exchanges on the back of the March plate change and the impact of an early Easter. So welcome back to the pod, Derren.
Thanks, Curtis. How are you?
Yeah, all good, thanks. All good. I've had a good look through the editorial, and there was one word that leapt out several times, and that was normality.
I thought you were going to say seasonal. Yeah,
yeah. Well, it's seasonal and normality. Yeah,
yeah. Both seem to have been sort of mentioned a lot to us. It does feel that when you look back at figures from previous years, certainly, I mean, the last few years have been very unusual, haven't they? But yeah, it does feel sort of back to maybe some seasonal norms and usual sort of patterns, if there are such things now. So, yeah.
I'm going to say, so it's a couple of words that people have been shouting about for the last few years. When will we get back to normality? When will we get back to normal seasonality? And as you say, it's probably the first editorial this year that you've probably mentioned those words a few times in it. But yeah, it'll be nice for many people to hear for a change, I think.
Yeah, and it is. It's pretty healthy out there still. It's not great, but it's okay. And I think dealers are relatively happy with how things are going, and sort of interesting dynamics in the market.
I mean, on that note, then let's start off the usual way. Do you want to talk us through, the sort of the main headlines at that 3-year 60 point, and which obviously is pretty much the in line with seasonal normality, as you say there. Do you want to talk us through some of the details and what's been happening in the month of April and the sort of first part of the year?
Yeah, so the first quarter there was a 0.5% increase over those 3 months. So we had one month where values went up by 0.7. I think it was during February. So it was a strong start. We've now seen values drop during April. In our Cap Live product, dropped by 1.5% on average, which is equivalent to about £300. So it's I guess a sort of a slight softening in demand has caused that, along with increased supply from what we saw from new plate activity in March. And that tends to happen, especially in sort of normal pre-COVID times. You get a lot of activity around the plate change. And then as Easter hits, you've got people going on holiday. You haven't got so many inquiries into that retail world, so it slows down a little bit, and that's what we've seen this time around. But that drop of 1.5% is broadly in line with what we've seen in the last. We always sort of go back to the start of Cap Live, which was so we've had 12 years of Cap Live now, and the average is a 1.2 drop over that period. If you then exclude 2020, where we were in a COVID lockdown, and then 2021, when values went crazy, going upwards, the average decline in April is minus 1.6. So we're really close to being sort of in line with that. And obviously we'll talk about fuel types, but if you look at petrol cars in isolation, they've only dropped by 1%. So that area remains quite strong. But I would say from a dealer point of view, it's probably been a little bit disappointed with how things have been post Easter, maybe a little bit behind where they budgeted for, but overall we think it's fairly normal for that time of year for what's happened.
I mean, you mentioned Easter there, and it came early this year, and I think on one of our last podcasts, it's probably not the best of timing coming at the end of the March month and the end of the first quarter, and how much did that influence the marketplace? And do you think we're now, as you say, recovering a little bit now from that Easter period?
The week before Easter, so the first sort of 4-day week with Good Friday was actually pretty strong. We saw more volume that week sold than in pre-COVID times on that Easter week, and the volumes, because of the less registrations in the market over the last 4 years, that's quite unusual for the sold volumes to be above above pre-COVID times. They go up year by year, but not when you compare back to 2019. So that was actually quite strong. But it feels as though maybe dealers were stocking up a little bit in that period, and then they took their foot off the gas when they once Easter was out of the way. And similar on the retail side as well. Really, it was. I think the school holidays are kind of staggered for Easter, and they're different parts of the country, and it felt as though they really sort of kicked into life after Easter, and that was when it kind of slowed down a little bit. It does tend to be that April and May are trickier months of the year because you do get a bit of the holiday season kicking in, weather improving, and bank holidays. So yeah, but I mean, it was pleasing with regards to the volumes that we were seeing. Cars are still selling. They just maybe just peaked a little bit on the pricing of them, and there's a reluctance to overpay. Good clean cars still seem to be sought after, and there's a bit of a gap between those cars needing a little bit more work. So that's maybe the ones that have struggled a little bit more, higher mileage as well. So, but yeah, generally Easter was kind of strong up until the Easter weekend, and then after that it dipped off a little bit.
And I mean, we always talk about, cap live versus the monthly figures, and we start off with the headline in terms of those monthly high level figures. But in terms of that live marketplace, did you see much? You're talking there about that acceleration towards that Easter holiday, and then that slowdown post Easter. Did you see much sort of? Was it a single directional trend as sort of post Easter started to slow down a little bit and then start to pick up towards the end of the month? What sort of activity are you seeing in that live when you're looking at the figures on a daily basis?
Yeah, so the way we work, we get if a car sells on a Friday, we'll get that data over the weekend, and we'll be reviewing it on a Monday. So we're reviewing it sort of in real time. A car sells through an auction, or we get the feed sent through, and you could definitely see a softening off. We've seen the conversion rates drop as well over that sort of post-Easter period. And in live, there was a kind of a steady movement down. So we're obviously reviewing the very latest data, and going back a little bit and looking at it from the start of the month as well, and just seeing if you can spot a pattern in what's happening. And that's what the team of editors do. And yeah, we definitely saw a weakening off over that period of time. And then the last couple of days before we cut off, so we cut off Tuesday evening of this week, so that we can publish today, 3 working days before the end of the month. And maybe a little bit of stabilisation there, maybe a slight improvement. So although we publish today, we're already valuing for those who have got live. So there will be some changes as you get into before you even start the new month, really, before some of the values are even published on the 1st of May in the auction catalogues. There could already be some movement, but it's not seismic. It's not huge movements that we're seeing down. But there was that sort of trend post Easter, and maybe a little bit of stabilising now, but it's probably too early to say on that one.
And Derren, turning to age bands, within the editorial this month, you've identified some interesting trends, certainly around overaged or older stock, haven't you?
Yeah, with age bands, if you look at that, the older vehicles have been more heavily affected. 10 years gone down 3%, 5-year-olds at 2%, so more than the average for 3 years. And yeah, with regards to sort of overage cars at retail, that's what we're seeing within the retail data, that are being reduced in price, or if dealers can sort of take the cars, buy the cars in the trade cheaper. Sorry, that's my dog's barking there. You can see that there is a little bit of activity in the retail world where values have been adjusted down, but it's not huge, and it is on sort of pockets of stock rather than large scale. And I think a lot of dealers are trying to hold firm on price, even though demand isn't 100% where they want it to be. I think it's wise to hold firm on it. This isn't a big correction or anything. And as I said earlier, 1.5% in a month of April is in line and is normal. So it's it's nothing to concern about. We have seen a little bit of weakness on higher mileage cars. And again, that probably affects the older vehicles. And as I said earlier, we've seen some of those more damaged cars without maybe a service history or a documentation, a bit of a reluctance to pay more for those.
Yeah, and how, in terms of vehicle sectors, any noticeable trends there? I mean, I did notice it wasn't a particularly great month for what we used to call upper medium cars, was it?
No, so yeah, that upper medium, as we call it, or D sector cars, they were the weakest performing sector. So they've come down by over 2%, 2.3%. It's a diminishing sector in volume terms.
Yeah,
The share of the market is around 10%. Sorry, half of what it was 10 years ago. So
yeah,
I mean, it feels like it's an SUV now, doesn't it? So
yeah,
SUVs are a lot more voluminous than upper medium. Upper medium diesels seem to have been a little bit more heavily affected as well, and we are now sort of 4 months along with diesel coming down by more than petrol values. So is that a trend, or is it just something that's happening at the moment? It'll be interesting to keep an eye on that. But we have seen some reasonable movements. I think the C-Class Coupe came down, Insignia Grand Sport Diesel, the VW Arteon Diesel will come down around 4%. And the Volvo S60 petrol came down by that amount as well. So that is the weakest sector, but it's also I can't see that being a continuing trend, particularly because the volumes in that area are so low
yeah.
compared to others now.
And that leads us neatly into SUVs, because within the editorial, you say that SUVs now make up over a third of sold trade. What trends did you see over the course of April?
Yeah, so SUVs are about 35% of our sold data now, but obviously an SUV can be like a small vehicle, or can go right up to the larger size, and it's actually that larger end that's been more heavily affected. But SUVs dropped by 1.6%, which is about £375 on average at 3 years. And yeah, the large ones are the worst affected because they've dropped by 2.3%, which is quite significant on a large one, not like £875. That's not helped by battery electric vehicles, and I'm sure we'll talk about that. They've come down, and obviously a lot of BEVs are SUVs, so that is within those figures. Some Land Rover products struggled again, with some dropping by sort of between 4 and 6%, which is can be thousands of pounds. So a little bit of weakness there in that SUV sector, but as I say, it's a very wide ranging sector, and lots of different movements in different directions, which is why live is so important.
And briefly, I mean, you've touched on sort of the fuel type trends that you've seen in a couple of areas already. What is happening with EV? I mean, the topic at the minute is, what are we starting to see in terms of notable movements in EV? And I know you've mentioned, and you touched on it a couple of times there, around those diesel values and why it's becoming an area to watch closely as well.
Yeah, the amount of time we spend talking about EVs compared to the percentage of the market that they are is incredible, really, because everybody wants to talk about EVs, and it is a fascinating area still. And I would say that demand is not where it needs to be, considering the volumes that are coming through now and the volumes that are going to be coming through with what's happening with the ZEV mandate. The used market remains tricky for EVs. Consumers are interested, but I think if a consumer's done his homework, he goes in for an EV. I don't think they go in for a petrol car and get switched into an EV. And we're also seeing, a reluctance from dealers to stock them. But we have seen it really mixed in that EV world. So people ask us what's happening with EVs in general. I've said for a while now, you can't really say what's happening in general. It's like there's so many different cars that are moving in different directions. And this month we've seen some real pressure on cars like the Toyota BZ4X, which has come down over 12%, which is nearly £3,000. The Nissan Leaf, I think that's been doing okay, but that's squeezed this month as well, and that's come down nearly £800 or 8%, over 8%. I think with what's happened to EV values, you could see that bottom end is maybe squeezing, and if you're looking for an EV, and now you can afford maybe a Tesla Model 3 for under 20k, or we've seen them going through under 10k if they're high mileage and a bit older. Perhaps the more mainstream lower end is not quite so attractive now, and has come down. Polestar 2's come down, the Mustang Mach-E's come down, and the Volkswagen ID3 has come down. But we're also seeing some models have stayed level. They're doing okay. There's not so much pressure on those. The Honda E, which has been under pressure previously, that's doing okay. Lexus UX, Seat Me, they've all remained level. And there are a couple of EVs that we've actually put up in value. The Mini Cooper and the Cupra Born have done well this month. So it remains really mixed, and you have to look at the detail there for what's happening. But those cars that are coming down quite dramatically, they're under pressure. There's more supply than demand, and that's what's and they're probably a little bit overpriced, so they're coming down.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Derren, every month you poll the views of the auction houses. What were they telling you about stock levels and demand over the course of April compared to March?
Yeah, I don't think there's any surprises with this survey this month. The stock levels have increased. Like 80% of the respondents have reported that. No one reported that stock levels have dropped, so it's fairly normal for the time of year. Obviously, with the March plate generating fleet returns, particularly, so those auctions that deal in the fleet world have seen increases. So yeah, that's supply increasing, demand decreasing for around sort of 50%. Just over 30% actually,
Yeah.
and about the same for 50%. So it's not. So it's kind of what's happened it's shown what's happened to values is kind of shown by this sort of microcosm in this auction world, that values, the supply has gone up and demand has come down, and it's a fairly normal dynamic there that we're seeing.
And thinking ahead slightly, and I know you mentioned it in the editorial, because you always give sort of a brief outlook as to what to expect over the coming months. I mean, in terms of prices now, where do you see it? We talked about seasonality and normalisation a little bit, and we're heading in through May, sort of midway through the second quarter. Where are you expecting to see prices head now as we move through the month of May?
I think we may well see more of the same that we've seen in April. You tend to get that in May. You've got a couple of bank holidays, and it is one of the trickier months of the year. So I think you could be in for maybe a 1.5% drop again, but then I think it will kind of stabilise. And I think what you get as you move through the summer could be a little bit more strength. I'm not saying values are going to go up; they will do for some models, but I think overall you're going to see less of a movement down, and that's traditionally what you see. If we are entering sort of more seasonal norms, you'll probably see a drop again in May, and then less of a drop as we go into June and July.
And finally, Derren, you recently did some research that was picked up across the media on BEV stocking trend, dealer type. What were the results, and what did they tell you about the different approaches of dealers to BEVs?
Yeah, it was interesting what we saw within the retail data, because only 17% of independent dealers have advertised a battery electric vehicle in the last 6 months. They're obviously really low. And we kind of pose the question, are they missing a profit opportunity? Because some margins do look healthy for those EVs, or are they right to be careful after the volatility of the last 18 months or so? And I think they are being very careful with EVs. And at the moment, they can sell petrol cars fairly easily. So why fill the space on a forecourt with an EV when they can fill it with a petrol car and they know they'll sell it because there's more demand for that? But obviously, as I said earlier, this has to increase if dealers, if the ZEV mandate is going to be hit. Every new car needs a used car bar at the end of it, and in 4 or 5 years, the EVs are going to be the norm. So, but they're probably just being a little bit reluctant at the moment. But I think it also within that was maybe more surprising was that less than half of franchise dealers have advertised a battery electric vehicle in the last last 6 months, and only 49% of car supermarkets. That all needs to increase, and it will increase, but it's slow. So yeah, demand is there from consumers, but it's probably not enough to mop up the volumes, and the dealers, they're probably not stocking enough to mop up that demand, that supply level as well. So
yeah, and as you say, for the independents, it is a dilemma, isn't it? Because they don't want to invest in stock that they don't necessarily have the confidence will be sold at the price they're advertising the cars for.
yeah, definitely. And if you see that some of those drops that we've made this month, you don't want to be stocking one of those and then seeing it drop. So there needs to be a little bit more stabilisation. But it's a bit sort of chicken and egg as well, isn't it? If they're not buying them, then the values will come down. So it can become sort of self-fulfilling prophecy with that. So it's a very difficult area, and it's model specific as well. And some are going to move faster than others. Within the retail sort of data, we track them when they come on the websites, when they go off the websites. And that is something that EVs can sell quite quickly on there, but it's probably just don't stock too many of them. But I would certainly encourage dealers to dip their toe in and buy small volumes if they haven't done already, and just see how they get on with them. But you need to train your staff on them, and you have to clarify the consumer with what they're buying as well.
Yeah, I think you make a very valid point. I think, at the minute, through everything, not just EVs, I think, the thing around, you talk about those diesels, the SUV sector and others, I think, now it's ever more important, one, to understand what's happening on a daily basis, but actually at a very granular level now that, gone are the days that you just sit there with a standard 60-day policy and work, that way. You just can't do that these days, can you?
No, you've got to look at the detail. You've got to spread your risk a little bit as well, and sort of maybe stock all sorts of fuel types in there and all different ages and mileages as well. And the devil's in the detail, as you always say, Phil.
We do. So, I mean, a great pleasure to have you on today. So I think again, for anybody listening that don't read your editorial, then they should be doing. If they're not joining your webinars, then why not? Because there's a lot of insight shared on your regular webinar. So if anybody does want to see and read the editorial from Derren, then definitely always on Derren and his colleagues' LinkedIn social feeds there. But actually, you can go into it over at cap-hpi.com. That's cap-hpi.com. And you'll see the editorial, just cars, LCV and bikes as well on the website there. So again, a huge thank you for sharing some of this insight and thoughts on the market, and particularly what to expect as we head through the month of May, Derren.
Yeah, it's a pleasure. Thanks, guys.
Thank you very much, Derren. We'll leave you to go and take your dog for a walk.
Sorry, there's been a little bit of background noise today.
Yeah,
sorry. You could have set Molly off. That was the risk. It was
exactly
Molly that was the risk of being set off. That was the bit.
Yeah, but it sounds though your dog set the builders off as well. So it's been a busy pod. So that's all for this special weekday Motor Trade Radio podcast. We're back with all the big car retailing headlines this weekend. Many thanks to Derren for joining us. Until the weekend, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.